Start off with those reserves coming in basically in line with expectations, so we didn't really see the rand moving very significantly.
The rand, yeah, of course, is seldom affected by release of reserve data, because it's very difficult to say how much of that is due to dollar purchases by the central bank and how much is due to revaluation on things like the gold price. But certainly, in line with expectations, the stated aim to bolster reserves and to cream off any excess liquidity in the Forex markets, and no great surprise on that front.
It's quite interesting because we were wondering if the Reserve Bank would be intervening on the rand, and perhaps if we did see reserves going up more than expected, then that would actually show that the Reserve Bank is planning to intervene at some point, at some level, with that very strong rand. Do you think that could happen going forward, perhaps in early next year?
I think we'll have to see how the debate, the policy debate pans out as far as the strong rand is concerned. The Reserve Bank has said on numerous occasions that they're not going to intervene. They will, however, step in from time to time to cream off excess liquidity. So going forward now and looking into the new year, it really depends on how the policy debate pans out between government, the Reserve Bank and trade unions.
We've also got the quarterly bulletin set to be released later on this week. Current account deficit, of course, going to be relatively key for the local currency. What are you expecting there?
Yeah, I don't think there'll be any major surprises. Current account deficit has been improving as our imports have been decreasing. Of course, last week's trade number will perhaps put a little bit of a question mark under that, because as the global economy improves and feeds through into the domestic economy, do we as a nation start importing again, and does that lead to future weakness as far as the current account deficit is concerned? So I guess this number, we're not looking for any surprises, but perhaps down the line, if the global economy continues to improve, perhaps we'll see a weakening or a deterioration in that current account data.
The rand hasn't really been moving in accordance to the local data. We've mostly been pricing it into the rand. It's mostly been moving in tandem with what we've been seeing on the emerging market front on a global level. Do you think that the rand could perhaps move to the local data if we do see a surprise on the current account deficit?
I think so. The big question mark now globally, of course, is when do the U.S. authorities start removing some of the stimulus that they've been injecting into the economy? Friday's job data was one of the catalysts that the market has been looking for, perhaps for a raising of interest rates in the U.S., perhaps sooner than later. So, of course, now the question mark around the dollar, where the dollar is going to go. Does the dollar enjoy some benefits now, as clearly the U.S. economy is benefiting from the stimulus that the authorities have thrown at the market? And on the back of that, if that is the case and the global economy does continue to improve, do then local figures enjoy more highlight as we move into the new year? And should we see any surprises there, perhaps the rand can be affected.
We've been seeing a sell-off in commodity prices, particularly in gold, buying into the dollar at this stage at around 148 to the euro. But many say that the dollar is still fundamentally weak. David, do you think that we could see interest rates being hiked early next year in the US that will actually keep the dollar stronger?
I think the chances of an earlier rate hike in the US are certainly improved with the jobs data that we saw on Friday. I guess it's going to be a very difficult road ahead for the Fed and other central banks across the world. Of course, they don't want to reduce the stimulus too quickly. That will lead to a double-dip recession. So timing is everything. But the market will now focus on US data as it comes in. And if that data does show a continuation of the positive trend that we've seen in the last few months, then certainly bets are going to be increased that the US will hike rates sooner than later.
Well, does a stronger dollar at around 148, 147 to the euro necessarily mean a sell-off in emerging market currencies, or do you think that we'll still see flows coming to the likes of South Africa?
Well, one must remember that since March this year, the currencies like the rand have enjoyed massive benefit from the interest rate differential. Of course, we've also benefited from a run on the gold price as it ran up to more than $1,200, and that was largely on the uncertainty as far as the global economy was concerned. If that uncertainty is removed and we see some benefits coming through, then of course the gold price might lose some of its luster. And in fact, perhaps some money moves back into developed economies as their economy, developed markets as their economies improve, and of course that will have an effect on the rand price. But it's much too early to say at this point. Markets still going to watch the data that comes out in the next few weeks and months.
Retail sales also set to be released this week in South Africa, contracting by 5.1% at this stage. We know that we are expecting a slightly worse number. Your view on this, and do you think perhaps it could signal that we could see another interest rate cut in South Africa in January?
Very difficult to say. Excuse me. Data like retail sales is not really a currency moving figure in South Africa, but it does point to the overall health of the South African economy. So we will be watching those numbers. We lag the global economy by anywhere between 3 and 9 months. And I guess it will be some time before we see the really positive data coming through into the South African economy. So, you know, things like the retail sales, they're more anecdotal than a market-moving figure as it comes out.
Well, as we head into the last real week of proper trading, David, would you say that volumes are going to be relatively thin, that volatility will be higher? And of course, how's this going to impact the rand? Do you think that we could see a little bit of a negative push?
I certainly do see liquidity drying up, as I would imagine most of the clients have done what they needed to do for this year. Holiday mode is really setting in, and I think price movements will be exaggerated over the next period. Volatility certainly, we're certainly expecting a slightly heightened volatility, and I do think the rand will probably have a negative bias to it, particularly if the dollar can move towards 147 and beyond that against the euro. The gold price perhaps still has some more profit-taking bias towards it, moving down towards the 1100 mark. Then certainly we could see the rand above 750, but I don't see any major shocks coming forward. I do think the market will move into what we call cover mode. We'll just cover all our interest and all our exposures and reduce a lot of risk. And I do think the rand can gain some slight negative momentum from that.